Okay, so for chapter 14, we're going to walk through the illustrative problem to help you with your homework. I have cheated a little bit and entered in the data that we are going to use for the problem. And instead of putting the data in, I just created our income statement directly from the data. Okay, so number one is already done. We have our income statements. Number two, using the DuPont formula, determine the profit margin. The investment turnover and the rate of return on investment, or ROI. And then we can just do all these at the same time. So residual income is what we need from problem 3. Okay, so using the DuPont formula, the DuPont formula uses the profit margin and the investment turnover ratios to calculate the ROI. So we're just going to do the profit margin separate, the investment turnover separate, and then that will give us the ROI using the DuPont formula. Okay, so our profit margin is just going to be our income from operations divided by our sales. Okay, so our profit margin is 20%, and our investment turnover is going to be our sales divided by our invested assets. Okay, and the two of those combined, you multiply the profit margin by the investment turnover to get the return on investment using the DuPont formula. So take our profit margin, multiply that by our investment turnover, and that gives us our return on investment. Okay. Now, residual income is whatever income from operations remains after hitting our minimum required internal rate of return on invested assets. Okay, so our residual income is going to be our income from operations less our invested assets multiplied by our internal rate of return. Okay, so our residual income is 75,000, and because we're working in an awesome spreadsheet environment, we can just drag those over, and now we have the same data for both the domestic and the international units. As always, if you have questions that this video doesn't answer or the other course materials, please feel free to reach out and I can help you.